Hey everyone, welcome back to Corporate Decoder. Today we're diving into paperwork so boring it could cure insomnia faster than a bedtime story about balance sheets. We are looking deep into the financial world of the Putnam Core Bond Fund's semi-annual shareholder report. It sounds like a quiet ride. But hold on, because this isn't just about bonds, it's about how your money is being handled and whether it's actually growing. So buckle up, we'll break down the key numbers and what they truly mean. Remember, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. Feel free to join us there to discuss all things business and finance. This report is a snapshot of the fund's activities covering November of last year through April of this year. It's like a report card. It shows how well the fund is managing its investments. This matters because it's not just the fund manager's money, it's yours as well. Let's review it. Let's get right to the important stuff. What this fund cost you, the investor. For Class A shares, the cost was about $32 for every $10,000 invested over the last 6 months. If you had $10,000 invested over the last 6 months, if you had $10,000 invested, you paid $32 in fees, and that's for each period. That's about 0.64%. If you invested and held this for 1 year, this roughly become 1.28%. You can think of that as for every 100 you have, they take about 1.28%. You can think of that as for every 100 you 9%, while Class R customers paid $45 in fees, and that's for each period. That's about 0.39%, while Class R customers paid $45 for the same 10,000. Interesting, you paid $32.22. 20 shares are pricier at 70 buys per 1 year, 29%, while Class R customers paid $45 for the same 10,000 invested. Okay, so what does this fund actually control? The total net assets were about $1.1 billion in April. That's a lot of responsibility. They have holdings in about 8 or 5 different things. It's a lot like diversifying your portfolio. Now, this is where it gets interesting. The portfolio turnover rate is 27%. This means the fund is actively buying and selling investments. Essentially, they're swapping out their investments more than twice yearly. That means that while the fund is advertised as core bond fund, their holding are anything but core. A fund with the word core should at least stick around. Now, what are the biggest components of it? A big chunk, about 32.9%, is in US Treasury bonds. This can refer to bonds and notes. It means the fund invests a good portion of its assets in safer government-backed investments. Nearly as much, 29.6%, is in US government and agency mortgage obligations. But it seems that the private sector has also inspired some conviction. 27.8% is in corporate bonds. The company also has some exposure to asset-backed securities, US government agency, mortgage obligations, and short-term investments. Let's slide through the financial statements. Jumping forward to the statement of operations for the 6 months. The fund made about $25.5 million in investment income, but it also had to pay about $2.3 million to do all of that. Looking at the statement of change in assets, the net assets are up about $379 million in this period, which is pretty good. This means the fund is in good hands that are actively managing the money. Right now, for my take, overall, the Putnam Core Bond Fund seems to be navigating a complex market environment relatively well based on these numbers. The positive increase in net assets and investment income is reassuring. However, the high portfolio turnover rate is something to keep an eye on because this increases costs and can have unexpected consequences. Where does the company shine? Strong asset base of $1.1 billion shows a solid position in the market and positive net investment income, positive returns. This semester, also wide diversification across government and corporate bonds is also reassuring. The risks, the high portfolio turnover, which can create instability. Additionally, high allocation to interest rate sensitive assets is a concern within this current environment. Is Putnam Core Bond Fund a good investment? For risk-averse investors seeking relatively stable returns, it might be a fit. But if you're all in on long-term, low-turnover strategies, explore other options. Investors should keep an eye on the turnover. It's a very active portfolio that might be the fund manager's strength or weakness. Alright, that's our decoding of Putnam Core Bond Fund's latest report. Got any thoughts about their investment picks or that high turnover rate? Drop a comment. If this analysis was helpful, hit that like button and subscribe for more financial deep dives. Don't forget to check out the Discord community in the description. Thanks for watching, and I'll see you in the next video.